the need for power is increasing, and you see that reflected in, I think, almost every utility in the United States has kind of put out their forecast, over the last 6 months, and all of a sudden they're all forecasting, load growth. Today, kind of looking forward, I think you've got a new player on the field saying, hey, we want a lot of power as well. We want, its scale. We want it now, and we want it available to us, kind of called AI. A utility earns a regulated rate of return, right? So they earn that return whether people consume the power or they don't, whether they hit their forecast or they don't. They earn a regulated return. So they have a fixed return that they earn. What I'm saying is that, in that fixed return, the more units they can amortize those fixed costs over, the lower the per unit costs are going to be for customers. And that's what Bitcoin miners do. They're adding more kind of, units that are being kind of charged and paid for, which is therefore helping to kind of lower the overall cost of the system.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Awesome. Nazar, thank you so much for coming on the podcast.
Thanks for having us.
Absolutely. Let's kind of, for those that don't know who you are and even know about TeraWulf, can you kind of describe like your journey into Bitcoin mining and what you do today?
Sure. So Nazar Khan, one of the co-founders of TeraWulf, our background was in the power space. And so we were in the power business, developing, building, operating power generation facilities, both in the United States as well as overseas jurisdictions. So for 20 plus years, we ran around the world trying to find where to put power onto the grid. So that's kind of what our business was. And from day one, we've always had a very strong operational mindset approach to it. So, we operated all of our own facilities and we operated facilities for third parties as well. We built some of our own power plants. We built them for third parties. So we had a heavy emphasis on kind of design, engineering, and operation in-house. Kind of 2017, 2018 timeframe, I started to hear about this wonderful thing called Bitcoin. So it kind of piqued my interest. And the one thing people kept saying is, it takes a lot of power to mine Bitcoin. It takes a lot of energy to mine Bitcoin. And so I said, hey, I think I know a thing or two about power. Let me try to see what this is all about. And so I studied Bitcoin and I fell in love with the concept of Bitcoin. And so I kind of started buying Bitcoin. But this idea that, mining required a lot of power was still, in my mind. And so I said, hey, let me at least talk to the folks that are in the space doing this. And so at the time, if you think back into kind of 2018 timeframe, 2018, now rolling to 2019, large Bitcoin mining facility was 20 megawatts. 25 megawatts were large scale facilities. And so I'd met with, some of the biggest players at the time. And what I quickly realized was that while they were, extremely intelligent individuals who had a ton of background experience, they didn't really have background experience in power. And fundamentally, the way we think about Bitcoin mining is you're just a converter of electricity, right? You're monetizing this local resource called power and converting it into this global commodity called Bitcoin. And if you can understand where power is generated, what the flows look like, what the supply-demand balance looks like in those areas, you should be able to procure power, at scale, at low cost. And that's what we thought our advantage was. And so I came to the conclusion that while, I didn't know much about Bitcoin mining, and again, this is 2018, 2019, I knew a ton about power. And, most people in the space, or almost all the people in the space, really didn't understand kind of large-scale wholesale power. And so that was really kind of what got us into Bitcoin mining. And from there, kind of, things really snowballed. Think about 2019. We started mining. I still remember the day. We got three, of the, I think they were M20s, and kind of got them at one of our sites. We put them on a bench and basically, lit up three miners. And I think it took us about 2 days to kind of get all three miners fully running. I mean, we didn't know what a pool was. We didn't know how to kind of get the miner going. And so we had, send people on it, kind of asking all sorts of questions. But what that does is, right, it really forces you to kind of understand and learn each and every nuance to it. From there, we built out 3 containers. Again, we designed the containers, we built them. By no means were those containers that good. But again, we had made every single decision on how to design it, how to build it. So every time an issue came up, we knew why we had made a decision and where to go from there. And so that was really kind of the genesis of things. Back in kind of 2019, we started mining. COVID hits in early 2020, the world shuts down. And so it was during that period of time we kind of continued to build up our presence in the mining space. And coming out of COVID, one of the first large-scale transactions we did was with a company called Marathon Patent Group, today Marathon Digital Holdings. And so kind of we took Marathon from about 3,000 miners to 33,000 miners, over a span of 6 months. And again, it was fundamentally behind our ability to kind of procure power at scale and do it quickly. So, and Paul and I founded TeraWulf in 2021. And so, since then we've been kind of, working away at TeraWulf. And, today, I think we're up to about 250 megawatts of operating capacity today.
Nice.
We should be at 300 by year end. And then we've got another, 300-400 kind of in the pipeline beyond that we're looking to build out in 25 into 26. And so it's been, kind of the evolution has really been scale. If you think about, again, I said earlier, large scale Bitcoin mines were 20 megawatts, 30 megawatts back then. Today, people are talking about 500 megawatts, gigawatt sites. And so fundamentally, the scale of the business has really changed. And you can kind of see that in the network hash rate as well, right? If we look at, today, we ramped up 100 exahash just in the last, 3 weeks, right? 3-4 weeks. If you just think about where the network hash rate was, it had peaked and it come down. But again, thinking about 100 exahash, when we first started mining, I still remember the network hash rate was about 127 exahash.
Yeah.
That was the entire network. And again, in the last 3 weeks, we've seen kind of 100 exahash kind of come back onto the market. So that's, again, the scale is kind of, I think, the big change that's really happened over the past 4 or 5 years. And that fundamentally kind of accrues to who we are, right? I think, our ability to kind of procure power at scale and at low cost is what we think gives us an advantage. And that, fortunately, kind of the market's gone that way.
Yeah. For the audience that may not know, is that scale and hash rate, is that like that much more machines and power being, consumed by those machines? Or is it like machines are becoming more efficient? Like, what's the breakdown? Or
it's both, right? It's a function of both. Today, with the latest Bitmain machine out there, the S21 JXP, every 100 megawatts puts up over 8 exahash of capacity. In late 2019 or 2020, right, is when kind of the S19 came out. You were talking about 3 exahash for every 100 megawatts, right? So just in over the last 4 years, we're talking about, a 250% increase in the capacity just for every 100 megawatts. And so that's been a big part of it, right? So again, you went from 3 exahash for every 100 megawatts to 8 exahash for every 100 megawatts from a just machine perspective. And then if you think about the network's probably grown, I'd say, my best guess, right? It's hard to kind of come up with exact figures, but my best guess is over the last 4 or 5 years, we've probably added, 8 gigawatts of capacity as well, right?
Wow.
So you kind of add the increase in physical capacity available to mine Bitcoin plus, the significant increase in the efficiency of machines. And you can kind of see how we went from 127, exahash, literally the day I think we started mining was 127 exahash was the network hash rate. Today, I think we're, over 650. So, so you can kind of see how that 4x can happen in a relatively short period of time when you put those two factors together.
Yeah, definitely. Yeah, when you initially got into Bitcoin and Bitcoin mining, were you like immediately, was it very intuitive to you of like, this is like a big idea and it's going to work? Or were there hurdles where you're like this, maybe the power generation mixed with Bitcoin mining works well, but I don't know if Bitcoin's sustainable and questions like that?
No, I think it was very, if you understand how the power grid works, and I think, the most underappreciated variable I think that people, sometimes overlook is that the power grid is largely fixed costs. When you put up a transmission line, it's a fixed cost, right? You cost money to build that transmission line, put it in place, and whether you use it an hour a day or 24 hours a day, it's the same cost, right? You had a front-end CapEx, all your maintenance is the same, so it's all fixed cost. When you think about the generation, the vast majority of the generation we've been adding over the last 5 to 10 years has all been intermittent in nature, right? So that's kind of wind and solar. Again, it's all fixed costs, right? It costs money to put up a wind plant. It costs money to put up a solar plant. Once it's up, the ongoing costs are fairly de minimis. The cost of fuel is zero, right? The fuel is the sun and the wind. And so again, it's fixed cost. Thermal generators are a bit different, right? You have a fuel cost. You have natural gas or coal that you're combusting to generate the power. But I would say, 60, 70% of the costs in the power grid are fixed in nature.
Mm-hmm.
And so the best way to then lower the per unit cost is just to have high utilization. And if you think about it, on 2 a.m. on any given day, the grid is significantly oversupplied, right? Most people are sleeping, kids aren't in school, people aren't at work, shops aren't open. Maybe there's some industrial kind of activity happening, but the 2 a.m. on any given day, the power demand is fairly low. By 2 or 3 p.m. Later that day, power demand usually peaks kind of in the afternoon, and then it kind of starts to tail off again as things wind down. And so, if system utilization is this important component, you have a mechanism that can effectively just soak up power and can do so pretty instantaneously. That's extremely valuable. When we think about how the Bitcoin mining works, I mean, every 10 minutes is exactly the same, right? Every 10 minutes, there's a block reward issued, and that's whether it's 2 a.m. or 2 p.m., whether it's, a super hot day, a super cold day, or anything in between. Every 10 minutes, the same thing happens. And so you now have this mechanism, and in that time, every input right? You know what the cost of Bitcoin is, what your network hash rate is, what your cost of power is. So on any given day, our team at the end of every day, we can say, hey, we made this much money, right? We know all our costs, we know all our inputs, we know what the output was. And so you have now this mechanism where for every single 10-minute increment, you can think about, what your economics look like, and you can turn those machines off and you can turn them right back on. So to me, it was kind of eye-opening to see that there was this kind of a load that existed, and there was such a clear correlation back to the value associated with it. Right. Again, you can always look and say there's 24 hours in a day. There's 6 blocks an hour that are mined, and it's very easy just to kind of say, hey, if I'm giving up something, what am I giving up, and what am I getting in return? And so having again this very economically rational load that you can really move around, almost kind of with infinite flexibility, was to me kind of groundbreaking. And so when you think about this fixed cost system that has a bunch of fixed costs, the more units you have that you're using it, the lower your per unit economics are, and all of a sudden you have this idea, this concept, this network called Bitcoin that again every 10 minutes works the same way, and can kind of you overlay the two. So that to me was what really attracted me. And so both from how it can be accretive back to the power grid was fascinating and extremely valuable. And then on top of that, if you just think about the value of Bitcoin itself, it's this global. I mean, it's the largest decentralized computational network that exists,
Mm-hmm.
right? And even with all the talk about AI and open LLMs and closed LLMs, I still think that if you fast forward out 10 years, that Bitcoin will still remain kind of the most kind of decentralized compute network that exists. Even with the amount of capital that's flowing into AI. So to me, both these factors were extremely fascinating. So it was more a question of how do we implement and execute a strategy within it? Because again, both concepts to me just kind of made a ton of sense.
Yeah, you mentioned earlier that the network over the last few years or so has maybe brought on 8 gigawatts more worth of power. Where do you think over the next 5 years that could be? Are we going to be adding significantly more power, another 8 gigawatts?
Yeah, I think there was a massive boom, right? I'd say the past 4 or 5 years from a physical infrastructure perspective, there was a massive boom. And to the benefit of Bitcoin, if you think about procuring large amounts of power at scale in, away from load centers, there weren't many other applications to use it. So Bitcoin miners kind of had, they had kind of the field to themselves per se. And so they kind of went out there and, picked their sites. Today, kind of looking forward, I think you've got a new player on the field saying, hey, we want a lot of power as well. We want, its scale. We want it now. And we want it available to us, kind of called AI. And if you think about the demand forecast that people are putting out there, I mean, they're talking about 25 to 30 gigs of incremental demand coming online just the next 4 to 5 years.
For AI only?
For AI only. So that dwarfs what the Bitcoin mining network did globally. And that 25 to 30 gigs I'm talking about is, mainly kind of just North America, right? It's not even on a global basis. I think it's even higher just on a global basis. And so when you think about, again, just the absolute numbers of what the forecasts are, and again, whether those forecasts are right or wrong, I mean, time will tell. But I mean, they're pretty large. And again, they're multiples of what the total capacity was added in Bitcoin mining. So I think we'll continue to see, capacity additions. But will we be able to replicate just in absolute gigawatts, what would happen in the last 4 to 5 years, I think it'll be challenging just because, again, the field is now, there's other players on the field looking for that same type of capacity.
So would you say to some extent, like AI and Bitcoin miners are kind of competing over the somewhat, like obviously we can produce more energy, but we can only produce so much more energy in like the next 12 months?
Yeah, I mean, I think it's an interesting question, and I think it's broader than just kind of AI and Bitcoin mining.
Yeah.
What kind of, if you think about what are the most valuable companies in the world, effectively they're all data companies. And what do you need to kind of capture, analyze, store, and now kind of use AI tools to kind of optimize that data? You just need energy. And so, and again, whether it's AI or other forms of data compute, I mean, I think there is, yes, competition in the sense that, are there scaled demand sources that want ever increasing amounts of power that are not just Bitcoin? Yes, for sure. And if you think about just kind of, again, I was listening to someone, the other day, they're talking about, if you just think about the evolution of the internet as well, the amount of power that was required to kind of run, the internet kind of back in the early 2000s versus kind of what may be required going forward. I mean, again, it's a non-linear increase, right? It's kind of, an exponential increase in power. So yeah, so I think, there are, the need for power is increasing, and you see that reflected in, I think, almost every utility in the United States has kind of put out their forecast, over the last 6 months, and all of a sudden they're all forecasting load growth.
In this frontier moment, Nazar is talking about how the need for power is increasing, and you can see that reflected in the forecast for every utility in the United States. This actually reminded me of a Wall Street Journal article I read recently. It said the US generated slightly less electricity in 2021 than it had in 2007. This is according to the Federal Energy Information Administration. And despite that, the economy still grew more than 3% annually over that period. So basically, we've had no growth in energy production for 14 years, but it's now starting to change thanks to Bitcoin mining and AI. Even in the article, it said executives at NextEra Energy estimated that electricity demand from data centers alone would grow 15% a year through the end of the decade. That's pretty significant growth in an industry that we haven't seen growth in quite some time. Now back to the show.
For the last 10 years, load growth has been flat, right? There's been no load growth. It's been kind of a flat load. And all of a sudden now everyone's saying, load's going to grow 2%, 3%, 4%. And, those numbers aren't large, but when you think about what's driving it, it's almost all kind of electrification of things. And again, data being a big component of that, and then kind of broader electrification. So if it's coming from kind of one or two, subset of industries that's really driving that entire number, and you think about 4% across this large load base, I mean, it actually means, a ton of power for that. So I think there is, but then I also think there isn't, in the sense that, every kind of a load has different operating characteristics. And so some loads have to run all the time. If you're running a hospital, you cannot afford to not have power. I mean, that's just, it's not a question. Government's doing certain things that are, defense. Again, you cannot afford not to have power. Can I afford not to have power to run, a ChatGPT query on my vacation next year? Probably, right? I mean, that doesn't need kind of that kind of a redundant kind of support. So I think what we'll start to see more and more is that, the load profiles will be further kind of defined. And when you start to define those load profiles, I think you'll then better be able to understand where those loads should go and how much they should pay. Because fundamentally, again, the system is kind of all fixed costs. System's growing. That means you need to add more stuff, more distribution, more generation, more transmission. Someone's got to pay for that, and who's going to pay for that? And all this already, you're seeing kind of the rumblings of kind of, I'd say, residential advocacy groups saying, "Hey, we're not driving that load growth. It's all these big AI customers, and so they should be paying for it. We shouldn't see an increase in our kind of utility bills." And so I think more and more, yes, there's kind of a kind of more than one draw for that power. But that being said, not all loads are the same. And once people further kind of define what those loads look like, I think that will then further kind of inform what can go where. And so, the other thing we're seeing right now is everyone just talks about, megawatts of available capacity as if they're all kind of interchangeable. They're not. right? I mean, a megawatt in one place may be different than a megawatt in another place. And so loads will gravitate towards where their operating profiles better fit with what can kind of be supplied there. So I think, we're in the early stages, right? I'd say there's a lot of discovery happening, and that's everyone from, the Mag 7 on down to these startups. I mean, everyone I think is trying to figure out, hey, we need power. Where are we going to get it? Where do we locate our loads? And how do we locate our loads in a way that we can kind of integrate them back to the grid? And, a thing I like to tell people all the time is that if you don't think about it on the front end and you're not proactive about it, if you don't do that, later on, someone will tell you how to do it. And usually it's worse off when someone tells you how to do it versus you kind of saying, hey, this is how I think we should approach it. So it's an interesting and fun time because, again, I think, when I look back and see what we've done in the Bitcoin mining space, a lot of the things that we did were part of a broader market where we were kind of setting a precedent, right? I mean, if you look at the larger scale Bitcoin operators, all of us have taken views and approaches which are becoming more and more institutionalized and standardized. But if you go back to 2019, 2018, I mean, there was no real kind of, standardization in the space. And so we've been a part of that process, which has been fun. And I think now what we're seeing is, again, with this, this broader kind of growth in demand for power, that, again, we're going to be part of this process to kind of hopefully standardize how, again, loads are located, where they're going, and how those loads need to kind of cooperate and integrate back with the grid. And so that's what's interesting, again, from our perspective is, I'll be the first to tell you what a GPU can do and how to optimize and run it. I have no idea. I mean, that's not who I am. That's not what we do. But to get power to a GPU, to do it at scale, at cost, and in a way that kind of is accretive back to the grid, I think, we are much better positioned than anybody kind of a Mag 7 company on down, right? Just because that's not what they do either. Yeah. And so that's where I find it very interesting. We're starting to see that kind of confluence of energy and data even more pronounced, right? If you think about Bitcoin mining, it was definitely kind of a intersection of energy and data, right? You were taking power, as I said earlier, running it through an ASIC, creating hash and making Bitcoin. And so now that trend is kind of, further kind of exacerbated and highlighted with this confluence of, again, energy and data kind of running through these GPUs. And so, it's an exciting time. And, every day, we're in discussions where, like I said, I think there's, quite a bit of discovery happening, and people are trying to think through and figure out how this is all going to come together. And, oh, by the way, we want it all done yesterday, right? Yeah. So it's kind of, that's the I guess, the name of the game.
Yeah, no, that makes a lot of sense. Would there ever be a scenario where like a utility company or a very large power producer would acquire a Bitcoin miner or a similar company?
I mean, no? people have said that. We used to be a power producer, and so my own view is maybe, but not likely. And the reason is timelines for Bitcoin miners and a timeline for a power company or utility are completely different. I mean, you can both speak English and kind of say, hey, we want something done quickly. And to a Bitcoin miner, that means in a couple months. And to a utility, that means in a couple years. And so, again, same words, same language, but kind of their reference is very different. And so I think trying to put in a Bitcoin mining operation into a power company or utility is tricky. And if you think about it, people say Bitcoin is an extremely volatile asset, which has some volatility, but power is an extremely volatile asset as well. And so managing just power and how you're selling it and when you're selling it in and of itself is a pretty complicated business. And then to layer on top of that, kind of managing the complexity and volatility around Bitcoin, putting those two things together, I think, makes it pretty tricky and challenging. And so will a utility or power customer want to have a relationship with a load that mines Bitcoin or does, kind of AI? Of course, right? Because they can kind of sell the power to them. They can kind of offlay the physical energy that they're generating. If they want to lock in kind of pricing around it, there's ways to do that. So I think those relationships will be there, and you're seeing them kind of grow, right? I mean, kind of a lot of discussion on kind of behind the meter operations. We were, the first company to do kind of a large scale behind the meter operation at a nuclear facility. We negotiated that deal back in 2020. Amazon, earlier this year announced kind of at that same site a larger kind of transaction for hyperscale data center. And there's been quite a bit of talk in PJM around how should these behind the meter loads work. So again, I think there's quite a bit happening with respect to where these loads can go. But again, will a utility just buy a Bitcoin miner? I don't see that. Will a data center company buy a Bitcoin miner? I could see that, right? Yeah. Because fundamentally, they're buying the infrastructure that's driving the Bitcoin mining, and they could see an overlap between that Bitcoin miner's energy infrastructure and how they can kind of redeploy it. So I would say I'd see more of it coming from the data center infrastructure companies rather than purely from a power utility.
Yeah, that makes sense. Interesting. What is TeraWulf's breakdown of like Bitcoin mining and like AI and HPC? Like I know you guys at least have like a pilot program from what I've seen. Like is there a percentage breakdown roughly that?
Yeah, we're early, right? And so we've laid out a roadmap where we have a 2 megawatt pilot coming online in August.
Okay.
So we'll kind of get that going. We have a 20 megawatt gross, 16 megawatts of kind of critical IT load building that's coming online end of the year, early next year. And we've kind of slated another 50 megawatt building for kind of, April, May timeframe in 2025. So that's kind of our, roadmap on AI for the next, I'd call it for the next 12 months or so. And there's a lot that we're doing in kind of building that business up. And so to sit here today and say, Bitcoin mining versus AI is 2% or 92%, I think it's too early to say. But, again, we're operating about 250 megawatts of Bitcoin mining load today. And so, again, I told you 2 megawatts, 20 megawatts, and 50 megawatts. Right? Just, again, order of magnitude in the near term, we're probably, we're targeting to probably be somewhere in that 10 to 20%. Where that goes over time, again, I think, we'll see kind of based upon, how, things play out. The other thing that, I still don't have, we still haven't quite yet figured out is, things don't have to be binary either, right? It's not, you have to either do this or you do that. And in some sense, I talked earlier about having different loads, having different operating profiles. Bitcoin mining, again, in my mind, being the most economically flexible load that exists. AI loads may not be, right? There may be, some technical reasons why, once an AI load is running, it can't kind of, be curtailed or, it's expensive to curtail it. And so in some sense, there may be value in having a super flexible load next to a semi or not so flexible load as a package that's kind of interacting with the grid. And so those are the things that I think, we're still thinking through and working out and trying to understand, what that kind of balance looks like. And so, again, I don't know, I didn't answer your question directly, but, I think in the near term, we've kind of laid out what we think we're doing on the AI side. And again, from a Bitcoin mining perspective, we've got a 50 megawatt module. So kind of every building we put up, building 4, which was our last building, came online last month. We're working on building 5, both kind of roughly about 50 megawatts of capacity. So in parallel with that work, we kind of continue to put up, these 50 megawatt Bitcoin mining buildings as well.
Very cool. What do you guys think about, or thinking back to 2021, like I feel like the public miners were announcing, hey, we bought, 50,000 ASICs from Bitmain and their stock would rip, or hey, we're scheduled to deploy, 200 megawatts worth of infrastructure or whatever at this date. It was like a space race to just deploy as much capital as possible into Bitcoin mining. How do you guys think about that with like the Bitcoin cycles? Because obviously that was kind of not a good time to deploy a lot of capital. You should have been deploying it in hindsight, like bottom of the bear market. If Bitcoin rips up higher and goes on a crazy bull market, are we going to see the same thing again where people borrow a lot of money and buy ASICs and things like that?
Well, I think if you just add up the miner orders that the largest 7 or 8 Bitcoin miners have put out, right? Just in the last 6 months, they're pretty significant. Yeah. And again, we've just went through the halving, right? So we kind of have almost a full 4-year runway before the next halving occurs. And so the economics of mining in that 4 years are easier to think about, right? Yep. Just kind of the block reward stays the same. So I think, Bitcoin remains a very interesting asset. I think, the Bitcoin network remains an extremely robust network. And so I think you've already seen that the Bitcoin miners are positioning themselves for, hopefully kind of a bull run later this year, next year, the year after, who knows? But, at some point you would expect it to kind of come through. And again, when you talk about infrastructure, you can't really hit a market when you see it, you're kind of too late, right? So you have to be doing work well in advance of that kind of run coming. And so I think, all of the larger scale Bitcoin miners are doing their part to kind of be ready for that run. And again, I think that's evidenced in the scale of the miner orders that they kind of put out, kind of in the first 4 or 5 months of the year. Again, if you add them all together, and I can't remember what the number is, but it's hundreds of thousands of machines, right? That kind of put out there. And so, I think, people are, the large scale miners are definitely kind of, getting ready, for, or anticipating kind of that next bull run.
Yeah. What would be like your response to someone that says like, yeah, I like Bitcoin, it's a great asset. Mining's interesting, but it also just seems like a brutally competitive market where like Bitcoin goes up a lot, then that means billions of dollars going to Bitcoin mining, which means difficulty goes up a lot. And then now margins are compressed back to where they were before. How would you reply to that?
Yeah, Bitcoin mining is definitely a competitive space. And so our model, right, is, and I told you earlier, the way we think about it is we're a producer of Bitcoin on any given day. We can tell you how much money we've made doing it. And we're profitable mining Bitcoin today. We'll be profitable mining Bitcoin, even if prices were to go down. And so we think and so as we produce Bitcoin, we sell it. So our view is that you shouldn't be investing in a Bitcoin miner to get price exposure to the increase in Bitcoin. If you want to do that, there's an ETF now, buy Bitcoin, buy MicroStrategy. I mean, there's a number of different ways to kind of play just pure appreciation of the price of Bitcoin.
No Bitcoin holder likes paying taxes. And Bitcoin savers could be leaving a lot of money on the table if they don't have a sound financial plan and tax strategy. Sound Advisory is a leading financial advisory firm with over $150 million of assets under advisement. They'll work with you to optimize and file your taxes with Bitcoin-friendly CPAs while also developing personalized financial strategies that align with your specific goals. Check out Sound Advisory at thesoundadvisory.com for more information. That's thesoundadvisory.com. And now back to the show.
But if you want to play a manufacturing company that's kind of manufacturing this global digital asset called Bitcoin, which historically, right, has had periods of over earning, right? So when the Bitcoin bull run occurs, the price of Bitcoin increases far more significantly than the network can keep up.
Yep.
Right. I mean, when when Bitcoin runs in a span of a month or 2 months, Bitcoin could be up massively. It's physically not possible for the network to kind of increase at a similar rate. And so you always have this like lag effect where, to your point, a lot of money comes in, but you see the reality of that capital coming in 6, 12 months out. And so you have to kind of be in the game when that run occurs, and you can kind of over earn. And when we've looked at it historically, I think on average, a Bitcoin miner should be somewhere in that 30% margin business on average, right? So there's periods of time where it's a lot lower, and then there's periods of times where it's a lot higher. And so, but if you're kind of consistently in it and you have a low production cost, we think, that's the kind of the zip code that, we think over an extended period of time that you operate in. And a 30% margin business is actually a pretty damn good business. Yeah. And so I tell people, say, hey, if you are interested in a business that can kind of generate 30% margins, on average over, long periods of time, that's kind of an interesting place to be. And so that's, again, how we approach it. And so, again, we think, we're a producer. And again, we monetize what we produce because there's no other revenue kind of coming in other than kind of that Bitcoin. And we can kind of tell our shareholders, hey, this is how much money we've made. And, the largest shareholders in the company are, the executives of the company, right? So this is near and dear to our heart because fundamentally it's really, we have a big stake in the company. And so we want to make sure that we're doing the most that we can with every dollar we have kind of coming into the company.
Yeah, no, that makes a lot of sense. What would you say is like the most difficult part about operating a Bitcoin mine?
It's every day, right? I mean, you can't take a day off.
Yeah.
It's every day, every 24 hours, every single day. You have hundreds of thousands of machines running. And so, for better, for worse, we don't have the luxury of having bad days. If you have a bad day, it can kind of be, it's pretty costly. And so, our team is an amazing group of people. And again, because like I said, day in and day out, they're at the site on top of things. And whether it's hot or it's cold or it's windy or season's changing or, we're doing some maintenance work, whatever it may be. You can't have any bad days, and so just kind of having that level of focus day in and day out is, I think, kind of the most challenging part. And it's, you can't really kind of take your eyes off things and kind of take it easy, because again, you take it easy for a little bit, a lot of issues kind of bubble up. And so we have kind of a very strong focus on ensuring kind of every day, every week that, we're on top of things. And that's where I think, kind of, like I said, what I'm most proud about our team is that, their ability to kind of, consistently day after day kind of be on top of things.
Yeah. How do you think about like miners potentially like affecting the price, or like what role do miners have affecting the price? Like I'm thinking back to 2021, a lot of capital went into Bitcoin mining rather than buying spot Bitcoin. And then I also think back to 2022, a lot of miners were like capitulating, selling machines, selling all the Bitcoin they mined just to survive. Do you think miners play a role in like, the price of Bitcoin, or not really?
I mean, not anymore, right? I mean, when you were, the miners were getting, 1,800 coins a day, that was a lot of coins. And so what the miners did with their coins had an impact. And at the time, the network, the total value of Bitcoin was smaller as well, right? So I mean, there's this, there was, when we first got into the game, right, this idea of kind of miner selling pressure, may have been a concept. Today, I don't see that, right? I mean, I think, at 450 coins a day that are Bitcoin miners globally are generating versus kind of the daily volume that's happening on the ETFs, just kind of, spot trading Bitcoin, it's no longer, I think, kind of an indicator. Could there be some sort of coincidence between what miners are doing and selling Bitcoin over the price of Bitcoin? But I think that's more of a coincidence rather than any kind of a driving factor. And again, it's just the amount of coins. And if you think about it, right, of the 21 million Bitcoin ever to be mined, 19.6 million or whatever the number is right now have already been mined.
Yeah.
Right. And so even if you just factor in all of the Bitcoin left to mine, I mean, we're talking about, less than 10% of the total Bitcoin that are out there. So again, I just see, I think, that factor, to me isn't really kind of a driving factor in the underlying price of Bitcoin.
Yeah. Does TeraWulf have operations outside the U.S. or is it U.S. only?
We're all in the U.S. Currently. So, we got 2 sites, one in upstate New York.
Yeah.
And then the second one in Pennsylvania at the Susquehanna nuclear facility.
Would you guys ever consider going international or no?
Yeah, no, we've looked at it. I mean, when we were in the power business, we had a number of plants in overseas jurisdictions. So we are, very familiar with a number of international power markets. What's interesting, right, is if you think about scale, the U.S. is a pretty unique place. The total installed capacity in the United States today, I think, is something like 1,300 or 1,400 gigawatts of capacity. Mm-hmm. If you just look at ERCOT or Cal ISO, those markets in and of themselves, I think would be in the top 10 globally in terms of the kind of the size of power markets. And so the scale of power that's available in the United States is very unique. And, when you look at Europe, again, all those European markets, I'd say are anywhere between 40 and 100 gigs. Yeah. So it's just the idea of kind of going there and kind of scaling up large scale operations is tricky. And again, I'm a big believer that, the supply and demand balance has to be kind of in your favor to kind of start to put down large loads of demand. And so when you're going into these power markets that are 50 gigawatts, 40 gigawatts, 80 gigawatts, the idea of putting up 300, 400, 500 megawatts, you really start to kind of push up against kind of the flex in the system and kind of the available capacity. And so we continue to look at, international markets. But, to date, investing more capital at the sites we have has always been, in our minds, kind of a better return than kind of a site internationally. Will that change in the future? Yeah, it definitely could. And then we constantly look at it. But so far to date, every dollar of capital we're investing, we're always thinking about, hey, should we put it here or can it kind of go somewhere else? And, we've so far have come back to the conclusion that, investing it into the assets that we have, we think is kind of a better return. What's going to be interesting, right, is that, if you think about just the distribution of the Bitcoin mining network, in the United States today, somewhere between a third of it, right, is kind of in the U.S. plus or minus, and 2/3 of it is the rest of the world. Yeah. So yes, majority of the Bitcoin mining network is outside the United States, but that's the entire rest of the world that we're talking about, and we're talking about one country that has kind of a third of it. So that also kind of gives you a sense of kind of scale. And for us, our model really is kind of scaled power, right? So we're not operating 20 megawatt sites. We're trying to operate 200 megawatt, 400 megawatt sites. And so again, when you talk about scaled operations, those operators that are kind of looking for scale, I think, it significantly kind of narrows the places that they can kind of play. And if someone's looking for 20 megawatts, again, kind of the world is their canvas. But if you're looking for 400 megawatts, right, I mean, pretty quickly that field narrows down. So that's, again, where we've been. But again, we continue to kind of look at, international markets. And the other thing that I think, is available in international markets is that kind of that responsiveness and the value of that responsiveness, I think, in a lot of the markets in the United States is kind of being priced out in a way that, Bitcoin miners are benefiting from. And we're in the early days in a lot of foreign kind of markets as well. And so I think there is an opportunity, if you can find the right place, where you can kind of lever, that transition that's occurring in those places. And so again, we're looking at things, but, to date, we've been, in the United States.
Interesting. Yeah. For someone that doesn't know a lot about power, like when you say 400 megawatts, like, can you kind of, like an analogy, like what does that equate to? Like, do you have any idea like how many houses or any sort of
analogy?
I
can't remember what the rule of thumb is on house, but it's a tremendous amount of power. Yeah. Like I said, I just think what's a good way to kind of quantify it? I mean, like I said, countries in Europe, right? If you think about it, countries in Europe, an entire country will have, 20, 30, 40 gigawatts of total capacity. And so if you talk about 400 megawatts, that's a 1%, right? So 400 megawatts of Bitcoin mining, is kind of 1% of, an entire European country's kind of, load. So that's, that kind of gives you just a sense of, and that's like everything that they do, industry, commercial, schools, residential. And so it is, these are massive amounts of power. And, so, and again, I think there's, some kind of heuristic out there, or kind of rule of thumb that says, every megawatt, kind of, powers, so many, 1,000 homes, but I can't remember, that's the stat off the top of my head.
The country analogy is pretty good and is pretty mind blowing to think about. When it comes to like Bitcoin mining and AI, like consuming or needing this much energy, do you think we're on the cusp of like massive exponential energy generation? Like we're going to start, like the world is going to start.
Well, I think what people, so we talked earlier about, this growth in the network hash rate from, 127 or whatever it was to 650 today. And, if you go back right there, when 2020, 2021, when Bitcoin had its last big run, there was a number of forecasts that said, Bitcoin is going to consume 12% of the world's energy supply. Because they said, okay, hey, everyone's going to run an S19 forever. The S19 is constant, doesn't change. The efficiency doesn't change. And if Bitcoin goes to 200 grand, this is how much money you can make, but you're running an S19. An S19 was 30 joules per terahash. Today, the S21 JXP is going to be 13.5 joules per terahash, right? So there's a massive efficiency gain. Some of our peers in the market have said they're going to be at 5 joules per terahash, sometime next year. So from 30 joules a terahash to 5 joules a terahash in 5 years, you're talking about, 1/6 the power consumption for that same kind of, terahash of output. So likewise, I think that, cost is always a big factor. And right now in these early days, people don't spend a ton of time thinking about costs. They're just like, hey, we need to get stuff up. We need to have, deploy GPUs. But for it to be as ubiquitous as people think it's going to be, the cost has to come down. And so that means, the GPU prices have to come down. That means, your cost to kind of build the infrastructure has to come down. And that likely also means that the GPUs are going to become a lot more efficient than they are today as well. And so I think over time, the thing, that I have found that I have underestimated, at times, is just the ability for the market to kind of significantly make itself more efficient. So therefore, kind of the power that you're drawing doesn't kind of go up exponentially because, again, it's not a static S19 that you're modeling for 10 years, but you have, these GPUs that are probably going to become 10 times more efficient, just, in the next 2-3 years, alone. So even though the total GPUs that are being deployed may be up, 5x, but if they're, 10 times more efficient, the total power draw they'll be higher, but it won't be, kind of many multiples higher. So I think, that's where it'll be interesting to see. And if you think about it economically, for those that can make it more efficient and less costly, there's a ton of money to be made.
Yep.
So that just means a lot of people are going to try to figure it out, and someone probably will. And when they do, they're going to make a lot of money. And so I think, yes, power. And again, if you think about the numbers I talked about earlier, if there's a 25 to 30 gigawatts of incremental demand coming just from AI, that's in the context of a 1,300 gigawatt system. Yeah. So again, 25 to 30 gigawatts is huge. But again, if you put it in the context of a total system in the US of 1,300 gigawatts, I mean, it's big, but it's also not kind of so significant that it kind of overwhelms the system. So, but again, it's incremental on top of what's there. And so it kind of forces more capital investment. So I think that what's driving kind of, I think the alarm really is that it's a significant more capital that people are forecasting to be invested into the power grid today than they were kind of forecasting 3 or 4 years ago.
Yeah. For someone listening that hears like that 400 megawatt number and they're like, wow, like Bitcoin miners are using a lot of energy, and that same person may not fully understand Bitcoin or may not see any value in what Bitcoin is, what would you say to them? Like, are Bitcoin miners like taking energy from someone else, or are they, using the excess energy? Like, how would you phrase that?
Yeah, I would say, again, this gets back to if the system is fixed costs. So, I'm a retail customer in Minnesota. I run my house, my kids go to school, I go to work, and I want my electricity bill to be low. And absent these large industrial loads, if you think about it, there's a shape to the daily load profile, right? During the night, load's pretty low. People start getting up 5, 6 in the morning. Load ramps up throughout the course of the day. And then again, 3, 4, 5 p.m., it kind of starts to kind of come down again as people wind down. But the system is built to meet kind of peak demand plus a buffer. And peak demand happens, only, a couple weeks of the year. And so you have a system that's designed to meet peak demand, and that system exists for all 8,760 hours of the year, but it's only fully utilized, a small, tiny fraction of that, right? A couple, kind of weeks. And so all of that excess supply is being paid for by somebody. And if you don't have large industrial loads, it's being paid for by the consumer, right? So your denominator of the number of units that are being consumed or used is just a lot lower. Your fixed costs are the same, therefore your per unit costs are higher. Well, Bitcoin miners, when done properly, and again, I think in the early days, there was a number of Bitcoin miners that didn't understand the wholesale power system, and I think did things in a way that increased costs for those around them. But when done properly, and I think if you look at all of the large-scale Bitcoin miners today, they're approaching it in this way. If you are kind of an energy sink and you're there to kind of consume the power when it's available, and again, fundamentally, you said earlier, Bitcoin mining is an extremely competitive game. No Bitcoin miner wants to consume power when it's at its peak price. So that just means by definition, we're not adding to load at peak. We're adding to load at not peak. Because if we're adding to load at peak, we're paying really high prices, which none of us want to do. So if you really think about this load, in some sense, it can be, when done properly, it's an accretive load back to the grid. And if you look at any utilities plans, they always have a big section around kind of demand response and kind of flexible loads, right? Because those tools to a utility in trying to reliably operate a system at the lowest possible cost, having the ability to have loads that can kind of follow the shape of what's happening on the grid and kind of not be there at peak times are extremely valuable. So again, whatever you believe about Bitcoin, all of that kind of set aside, just as an addition to the load, if kind of operated in a proper way and kind of and can be coordinated with and interacting with what's happening on the grid, can be an extremely valuable tool overall. And I think, again, in places where you're seeing a significant kind of penetration of Bitcoin mining, again, done in this way, you are seeing the benefit of kind of, I would say kind of a more robust and kind of, better cost profile.
Yeah. So would you say that utilities could theoretically become like more profitable because of this? And then if they're more profitable, maybe they can lower prices for consumers?
Well, again, what the utility does is they say, hey, we need to spend X money and we need to earn a rate of return. So I'll just make up numbers. If we need to spend $100, we need to make a 10% return. So we need to get back $110 in revenue. They then say, okay, we're dividing that $110 by the number of units, and there's 10 units that were used, and so each unit's kind of $11. Like that's what a utility does. And again, I'm significantly oversimplifying it, but fundamentally, it's hey, we have a cost, we have a number of units, and kind of based upon the number of units, we come out to a per unit cost. And so what I'm saying is when Bitcoin miners operate properly and when they're not increasing peak demand, again, that's a very important distinction. When they're not increasing peak demand, the total revenue that the utility has to earn is the same, but Bitcoin miners are adding more kind of units to the denominator, which then effectively now you're dividing the 110 rather than just over 10, maybe over 12, right? So that the per unit economics now have gone down because the number of units that they're kind of allocating the cost over is greater. And so from a utility earns a regulated rate of return, right? So they earn that return whether people consume the power or they don't, whether they hit their forecast or they don't. They earn a regulated return. So they have a fixed return that they earn. What I'm saying is that, in that fixed return, the more units they can amortize those fixed costs over, the lower the per unit costs are going to be for customers. And that's what Bitcoin miners do. They're adding more kind of, units that are being kind of charged and paid for, which is therefore helping to kind of lower the overall cost in the system.
Gotcha. Yeah, that makes a lot of sense. Very long term, like when you think about block subsidy halvings occurring over, we just had one, another one in 4 years, 4 years after that, it's obviously eventually going to go to zero. Do you think that like the end game is still these very massive, like 400 megawatt mines, like decades from now, or do you think it's going to get smaller and smaller over time?
I think we will start to see a kind of a stratification in Bitcoin mining loads. And what I mean by that is over the last 4 or 5 years, every Bitcoin mine has effectively been a baseload Bitcoin mine, right? They're buying, they're trying to get the lowest cost of power. They're trying to scale up in big amounts, and then they're getting, the most efficient machines. And so the way to earn your money back is to run those machines as much as you can. And so those are kind of just baseload facilities. They're always just kind of running. And if you look at how, TeraWulf and any other kind of Bitcoin miners evaluated, everyone says, how many exahash you have. You should have produced X Bitcoin, you produce Y Bitcoin. Is that good? Is that bad? And then again, that fundamental within that is that your miners are running 100% of the time. As kind of the block reward kind of continues to get cut in half, what I see happening is that there'll be some baseload facilities, right? So people will continue to invest in the latest and greatest machines that are intended to run all the time, and they will put those facilities where they can kind of procure power for almost all of the hours of the year. But you also see other facilities that are, again, an S19 was latest and greatest 4 years ago. Today, it's but if you could buy an S19 for not that much money and you had a place where power was super cheap 30% of the time, could you make money doing that? Probably. Mm-hmm. And so I think over time, we'll start to see kind of, baseload facilities, kind of mid-merit facilities, peaker kind of mining facilities that are now in tune with the availability of low-cost power. And they're going to match machines. And if you think about, I think, I can't remember what the exact number is, but I think there's like 2 or 3 million S19 machines that are out there.
Yeah.
Right. And those machines can run. It's not that they are physically obsolete. And S19, we have a bunch of S19s. They're all running great. They may be economically obsolete depending upon what your cost of power is. Yep. But if you had 2-cent power, could an S19 make money? Sure, it can.
In this frontier moment, Nazar is talking about how older Bitcoin ASICs can still actually make money. They just need to find the cheapest energy in the world. This concept comes to life in Kenya, actually, near Hell's Gate National Park, where an extinct volcano powers a Bitcoin mine. A company called Gridless, which you may have heard of, harnesses geothermal power from the volcano to run a Bitcoin mine, and the excess energy that's generated by the geothermal energy actually powers 5,000 rural homes. And this innovative approach not only makes renewable energy projects financially viable, but it also electrifies communities that previously had no access to power. By co-locating their mining operations with renewable energy sources, Gridless ensures that no energy goes to waste, effectively soaking up surplus power. So yes, Nazar is correct. This is where the older generation ASICs go. And now back to the show.
And so should you be building a facility that runs, 25% of the time with 1-cent power with S19s? That's not a bad business. And so I think, over time, you're going to see further kind of stratification where mines are going to be more tailored to the availability of power, and the machines they use will be tailored to kind of what's available to them. Yeah. And so it's not just a question of let me buy the latest and greatest. That will continue to happen. But let's also think about this older equipment, how it kind of gets. And so if you see, even in the United States, as people have been upgrading their fleets to the S21, the Pros, S21 Pros and beyond, a lot of those old machines, they go overseas, right? They get put on, a plane or a boat and they kind of go somewhere back overseas because, again, they're likely going to places where they have power available to them for periods of the year at a really low cost. And they're like, hey, we're not going to buy an S21. We can't run all the time anyways. Let's just buy, kind of an S19 XP for $8 a terahash. And if we got to run 40% of the time, this is actually, the economics are pretty good. So I think, we're going to start to see that. And if I were to guess, 10 years from today, Bitcoin miners will be saying, hey, this is our baseload operating exahash. This is kind of the exahash that we operate 40 to 60% of the time. And this is the exahash that we operate 20% of the time. So when you're evaluating us, don't assume that every single exahash we have has to run 100% of the time, because that's not what we're doing. Yeah. This is how we're doing it. So that's, how I see kind of, over time, the space evolving is just kind of, again, Bitcoin miners have been extremely, I think, nimble and responsive to kind of what the market's giving them. And so I think as over time, and again, we talked earlier about, the number of machines that were ordered, we're, I don't know, hundreds of thousands, right? And so again, you can see how, 3 or 4 years from today, when we're on to, 2 or 3 generations of machines later, at 13.5 joules per terahash, maybe like, hey, it's kind of mid, and, you got a 5 joules per terahash machine running. What's going to happen with all those machines? Should they just kind of be shut down? No, they're probably going to go to, again, a place where, they have availability of low cost power for periods of time, not all the time.
Yep. So there's basically, would you say there's like this natural economic incentive for older machines to just kind of scatter all over the world in these like crevices of very cheap wasted energy?
Absolutely. And you're seeing that. Like I said, I mean, all the folks that are recycling or are kind of upgrading their fleets and, getting rid of the S19s, most of the ones that I've seen have all kind of gone overseas. And so, to your point, they're kind of showing up in these places where they have availability of low cost power for certain periods of time, but not all the time.
Yeah, it's very cool. 2 more questions, and we can probably start to close it out. What's something that you believe, as operating, one of the largest public Bitcoin miners, that most like Bitcoiners maybe at the conference in Nashville would disagree with? Any like controversial opinions or something like that? Or you think wrong?
Yeah. Well, I think one area is just how we work with the broader communities, right? And I've always been a big advocate of engaging. And again, if you really break down what we do as Bitcoin miners and how we do it, I think there's a tremendous amount of value to that. And our largest facility is in the state of New York. And if you ask people, hey, is New York a good place to mine Bitcoin? By and large, most people would say, nah, New York's tough. Our experience has not been that. And I think part of the reason is from day one, we've always been telling the local community, the grid operator, all of those folks that we're interacting with, exactly what we're doing, how we're doing it. And we have open doors. We always say, hey, you want to come check out what we're doing? Please come. We would love to be able to show you what it is we do it, who is doing it, and how we do it. Because we think we're actually, again, we're an accretive resource back to the grid. And so sometimes, within the miner world, some of us are, maybe a bit more paranoid. And I'm not saying it's bad to be paranoid. Sometimes it's good to be paranoid. But I think, sometimes you get a lot more paranoid when external counterparties say, hey, what are you guys up to? Like, what are you really doing? My approach has always been, let's, come to the facility, meet the folks that are operating these plants, talk to them. Don't listen to me, kind of talk directly to them. And so that's maybe, a place where, there may be a difference of opinion within it. And, we've got an election coming up. The current administration has had an approach which, I think has been challenging. And, I think there's a number of things that could have been done differently, depending upon, what the next administration is, that may or may not change. But again, I think fundamentally being more engaging with those around us is going to be better for us in the long run.
Yeah, makes a lot of sense. Last question. What do you think is the biggest risk to Bitcoin?
The price of Bitcoin or just
Anything. I mean, it could be related to mining, could be related to the price, could be.
I think the biggest risk to Bitcoin is that national governments figure out how to operate effectively, which I don't see happening. So I think we're in a good place.
Yeah, no, that's fair. Well, thanks so much for taking the time to record this. This is awesome. Any closing thoughts?
No, well, thank you for having us. It's great, and what was fun about this is just kind of reliving the last 4 or 5 years, and to think about where things will be 4 or 5 years from today. That'll be kind of a fun journey. And so again, thank you to all the listeners as well, and thanks for taking the time to listen in the discussion.
Awesome. Yeah, thanks everybody.
Thank you.